Elon Musk has taken advantage of a recent rebound in Tesla's stock price to sell $7 billion worth of shares in the electric car maker since the end of last week, according to a series of regulatory filings released late on Tuesday. The sales disclosed on Tuesday were at an average price of $869 a share, well above the low of $620 a share that Tesla shares hit back in May. The sales are the first since the Tesla and SpaceX chief executive sold $8.5 billion of stock in April, shortly after he agreed a $44 billion deal to buy Twitter and added to his cash reserves as he faces the social media company's demands to go through with the purchase. For more on these headlines, we're joined by Olumide Adesina, financial analyst with Quantum Economics. Olumide, good morning to you. Thank you so much for joining us. The Foxconn second quarter profits, what do you make of their numbers?
Yeah, I think it's very interesting because the semiconductor company is really trying to take in more entry into the digital space. You know how systemic roles semiconductors play in the industry, and recently Joe Biden's signing of a $52 billion bill to support the semiconductor industry tells you that more subsidized components really pushing on all those things. I think it's a very positive deal for them. And, you know, they produce systemic growth for many big giants, including Apple and other likes like Samsung also. So, but the battle here right now is we don't know how the Chinese would really slow down, because there are reports that the Taiwanese government is trying to clamp down on Foxconn to reduce their exposure in China. And that's pretty much on the ongoing battle over the mainland and the island. So it's really left to see for the good, but presently the business seems to be very interesting. And you know that Foxconn plays a strong systemic role in the digital space in the world global economy. So we are not surprised with those numbers.
All right. To the United States, the U.S. inflation expectations, economists have been wrong in the past with their forecast. They're looking at, I think, 8.7%. Compared to 9.1 that we saw. If that forecast turns out to be wrong, you might see the Federal Reserve maybe call an emergency meeting ahead of the next FOMC meeting in September. What do you think? Do you think we're going to see a deceleration in U.S. inflation when those numbers come out later today?
Yeah, we're expecting to see a deceleration, because if you look at the cost of energy and food items, if you look at non-core inflation, for example, where the numbers look like they moderated. So we're expecting to see at least some basis point reduction in that. But just like you mentioned earlier, if we see the opposite, it means that US Fed will really might increase interest rates by more than 100 basis points, and also might even have to tighten in more liquidity by expanding their balance sheet reduction size. But having said that, it looks very unlikely, because if you listen to many of these earnings, including Tesla and JP Morgan, Chase, and Diamond, they spoke on the fact that inflation seems to have peaked. But recent economists like Mohammed Grant from Bugros will tell you that this is very unlikely, because the way the numbers, if you look at core inflation, where that tracks services, it still looks like goods are still high. So it's pretty very dicey, but the numbers this afternoon, Nigerian time, would really tell where it's heading to.
All right, we'll see what those numbers are, 1:30 Eastern time. Coinbase, the massive $1.1 billion loss, $460 million of that, impairment charges. I mean, is this still part of the crypto winter narrative with what we're seeing with Coinbase numbers?
Yeah, Rosus, that's the best word, because liquidity has really dampened, and the fact that we're not seeing the buzz that we saw in 2021. Recall that the crypto market valuation at November was $3 trillion. Right now, it's just moving at $1 trillion, and big names are leaving the board. Tesla sold off their position. We're seeing some institutional investors also staying on the sidelines on growing inflation worries, and the fact that the global economy might be heading towards an hard recession. And recent number coming out from UK really puts the digital assets under more pressure. So I think right now it's fair to say that Coinbase, having systemic role in the crypto market, has suffered such losses. But the interesting part is that if you look at the stock price in the last couple of months, it's up by 80%, and that's because they have a partnership with BlackRock, and that has given investors some hope. And BlackRock has a $9 trillion asset management exposure, so pretty much investors are betting that trickles of that might come in play. So we've seen the stock rally relatively at that period, despite the recent Q2 results of losses.
Let me ask you this real quick, just to follow up on this Coinbase matter. If we've seen crypto, we check crypto prices every morning. Why is it that crypto prices track equities? I mean, as far as the debate as to whether or not they are securities to be regulated by SECs around the world, or whether they're actually, currencies to be tracking global exchange. What do you make of the fact that crypto seems to be tracking global equities recently?
I think the reality is that investors are not more looking at Bitcoin as the digital good. They see it more as a risky asset, an asset that is usually for growth valuation rather than for hedging against inflation and things like that. So that's why we've seen the positive correlation. But I think, to be fair, in recent times, when we've seen the stock market rallying the past few weeks now, we see Bitcoin decoupling, though Ethereum has almost doubled in the last 8 weeks, and that's presently because of this ongoing merge where it will be moving from its proof of work to proof of stake. But the reality is that investors are not buying the idea that the crypto market offers the wealth preservation. They see it as much of a growth asset, so tagging it as a risky stocks, and that's why we see the correlation, particularly with growth stocks. So they put it at that category.
All right, thanks for that. It's an ongoing, interesting debate. Just a minute ago, Elon Musk selling $7 billion worth of stock. Let's quickly take a look at a tweet here where a Twitter user asked him if he's going to keep on selling, or rather, if he's done selling. And then he said, yes, yes, we have that tweet. They asked him, are you done selling? He says, yes, in the hopefully unlikely event that Twitter forces this deal to close and some equity partners don't come through, it's important to avoid an emergency sale of Tesla stock. So I guess he's hedging his bets. So what do you make of what he did?
Brutus, it's very difficult to understand the body language of Elon Musk. This is the third time he's saying that he wasn't going to sell Tesla stock. Though there's some rationality behind the fact that, in case the deal is being forced, and Elon Musk doesn't keep a lot of cash, he needs cash. But there are concerns that he might have cash flow issues. Recall that he has sold all his Bitcoin exposure. Recall that he's aggressively also taking Tesla. Tesla has some liquidity issues, with China, the slowdown in the business, the fact that also we're facing some regulatory concerns also might mean that maybe the company has some black channels that we are not aware of. But the stock still really looks good. It still remains the world's most valuable car company, and investors really are piling up. Like you mentioned, the stock is really trading at $850, telling you that investors are betting that the renewable bill being passed by Joe Biden might push the stock above $1,000. So interesting times, but it almost can be very deceiving sometimes. So I don't want to look at his tweet to make decisions.
Yeah, that's very, very, very accurate. I agree with you on that. Olumide Adesina, financial analyst, quantum economics. Thanks for taking us through the headlines. Appreciate your time.